Your first chapter is looking at accounting for management. I'm just going to spend a short amount of time looking at the information provided at the front of each chapter. So what you'll see here then is we've taken the syllabus and we've listed the items from the syllabus that you're going to cover by studying this chapter. And obviously the more syllabus outcomes, the longer the chapter is likely to be. We're also highlighting the context, so how this chapter is likely to be examined and where it fits into things. So in this particular chapter then, you'll see that you're going to be describing the purpose and the role of cost and management accounting within an organisation's management information system. That's how the syllabus phrases the first outcome, but basically we're going to be learning here then about what management accounting is all about and why it's so integral to the company and to management. We're also going to be looking at the differences compared to financial accounting that you might have studied in F3, and we're also going to be looking at planning, decision making and control as an introduction, and we will be coming back to those later on. Be thinking about the differences between data and information, what makes information good, and also what limitations there are when management information is used for management to make these decisions within the organisation. So these are the areas, as I said, we'll be looking at in this chapter, and although the course is broken down into different chapters, and the study text is also broken down, everything is examinable at once, and it's assumed that by the time you sit the exam, you'll be ready to tackle all of the topics. So as we start to go through, you'll see that there are interrelations between the materials in the different topics. So how is this going to fit? Well, this chapter then is very much an introduction to the paper. It's still very examinable, and there will be questions on every chapter, including this particular one, and we're likely to see this chapter examined in section A of the examination. What follows next then in each set of course notes is an overview diagram, which basically takes those syllabus guide detailed outcomes and puts them into an overview diagram, which gives you a signpost, if you like, of the chapter. I'm not going to go through the overview of each chapter in as much detail as I have this one. I just wanted you to be aware of what the information at the front of each chapter meant. It's time now to get started with thinking about how management accounting is useful. In information for management then, we're mainly going to be thinking about what it is that the management accounting function does for the business and the role that it plays. And the starting point for that will be the comparison with the financial accounts, so the statutory accounts that the company is legally obliged to produce. We're going to be looking at some classifications and terminology as well, so we need to understand the differences between data and information as terminology, and we'll be looking at what features make information more useful. Finally, we'll be looking in this chapter at some of the limitations of information and data, and as we've said then, this chapter should be viewed as a scene setter for the entire course. An obvious question to ask then is, what exactly is management accounting? And the whole course is going to explore the concepts of management accounting, so you're going to learn over the coming sessions what it's all about and how it works, but it's essentially providing and then using accounting information by managers of the business so that they can use that information to make decisions which are going to help the organisation to achieve its objective. So what we're going to be thinking about during the course then is this information, and that's what we'll be looking at in this chapter, and we'll also be looking at making decisions, what the objectives of the organisation could be and how it varies between different organisations. We're going to be spending a lot of time thinking about getting this information, doing calculations and using that information as well. So next we need to think about then, what is it that a business could have as its objective? Well, for the majority of the course, we are going to make the assumption that we want to maximise the wealth of shareholders. And wealth maximisation is explored throughout your ACCA studies, but here we're going to assume that that is by maximising profits. We say we're going to usually make this assumption because in later chapters you'll see that we also need to consider not-for-profit organisations, and clearly their objective is not going to be maximising the wealth of shareholders. So we're going to be looking at making decisions on the whole that increase the profits of the organisation. And how do the management accountants help with this? Well, there's 5 different areas then that they are going to be involved in. So costing, decision making, planning, control, and performance evaluation. So costing is quite straightforward then. Basically, how much does it cost us to actually provide the goods or services to our customers? And once we know that, we can work out how much profit we're going to get from one unit, and we can use it to help us to set selling prices so that we can work out that profit, and also so we can value our inventory. Once we know the cost, we can start to make decisions. So should we produce the product? How much should we charge for it? How many should we be producing? Where should the money come from to finance the business? Is it worth undertaking a project, for example, an expansion of our capacity, or perhaps building a new factory? We'll be looking at those things in project appraisal. Thinking about planning then, so once we've made decisions, thinking about what it is that we want to do. So what are our objectives, and try to formalise those into a budget, into a financial plan. Because it's essential then that we know how many units we are planning to sell, so we know how many to make, and therefore we know what materials we're going to need to purchase for the production requirements. So we'll see that sales are often a very good starting point for making those plans. It doesn't just stop then once we've actually undertaken our production. We also need to think about controlling it. So make sure that the company sticks to the plans, and any inefficiencies or any variances from the plans can be investigated. And we're going to do that through variance analysis. This will also be linked to performance evaluation. So having a look at the end of the period and assessing either individual employees or parts of the business about how they compared to their budget, so what their performance was compared to budgets or targets. So if we're thinking about using information to help make decisions, we need to think about information that the business might need to obtain externally. And the idea then of this lecture example is that it's a bit of brainstorm really about the different sources of external information. And we can categorise them here as we've done by their different type. So if we're thinking then about information that we might need about competitors, imagine you were running a business. You'd probably want to know what sort of prices your competitors were charging. You'd probably want to know about the products, what specifications that those products have, and also what kind of markets they are operating in. So do they have a physical presence? Are they just an online retailer? Thinking about your customers, we need to think about what their needs are and their wants. So what do they need or want from the product? What specifications must it have to be appropriate to them? And also thinking then about the price that they're going to be prepared to pay for the product that has those particular specifications. Suppliers as well, what have they got? What is it that they can offer us? What products can they offer? What prices are they charging? Also thinking about the quality, so it's not necessarily going to be the cheapest inputs that they want. Thinking about the time scale for delivery. How long are you going to have to wait? How flexible are they going to be? And also thinking as well perhaps about their financial position. So thinking then about their financial position and thinking about that because it's important to do with the survival and the continuity of supply. From the government, we're going to need to know about tax rates, things like the rate of VAT, because that's going to have an impact on our sales price, the minimum wage, what we're going to have to pay our labour, and thinking basically about any legislation that might impact on our production. And you may of course be able to think of others too. An important difference that you need to be aware of then is between management accounting and financial information or financial accounting. Financial accounting then will be what you will study predominantly in S3, and it's what's used then to produce the published financial accounts. The source data is going to be exactly the same for the two sets of information. So the sales of the business will come from the shops, the retail outlets, wherever the sales are being made, but there are some differences in the way that that information is used. So first of all then, thinking about legal requirements. Well, it's a legal requirement then for businesses to have financial accounts. If they're of a certain size, they must publish financial accounts. Although it's not a legal requirement, management accounting is still very, very important to businesses, but they're not under any legal obligation to do so. When we're thinking then about the users of these accounts, well, financial accounts then are used by people who are external to the company and also people who are internal. So if you want to go and get a set of published accounts for a company, you don't have to have any connection to do so. You can obtain that information. Management accounts, though, are very internal and they're very private documents because the company is going to have information here which would be useful to their competitors. They want to make sure that that is protected. The financial accounts then must be true and fair. So what we mean by that then is that they don't have to be 100% accurate, but they must give a true and fair representation of the transactions. With management accounting, there isn't a prescriptive level of accuracy, and basically they need to be as accurate as possible for the user's needs. So it'll depend then upon the user's needs and depend on what it is that those management accounts are going to be utilised for. The rules then that govern financial accounts are the generally accepted accounting principles. However, there are no specific rules for management accounting, so there's no specific rules, just established techniques. And we'll be using some of those techniques during the course of this paper. And it's very, very important with all exams that you read the question carefully, but this is especially true here because the way in which a company decides to present something is specific quite often to that company. There are no set rules about it. With financial accounts then, it's all about past data that's being reported. They're a historical representation of the last accounting period. The management accounts then can use past data. They can also use present data about what's happening now, and they can consider the future. So whatever time horizon is appropriate for the purpose. So we'll be thinking then about different types of decisions that are being made. So they can make decisions or be used to make decisions about the future. Financial accounts then will be the consolidated or aggregated accounts for the whole company, whereas management accounts can be split into segments or divisions, or indeed it could be the whole company. It's going to be again as is needed by the company. Financial accounts then will be published as an annual requirement. Management accounts will be as needed. So some management accounts will be prepared monthly, some might be done quarterly, and at certain times of the year in certain businesses there might be information that's prepared daily, so for a retailer perhaps in the run-up to Christmas. Sales might be considered daily so they can make changes and implement promotions if they're not hitting targets. The format of the financial account then is governed by the Companies Act, which lays out what they should look like and what order they should be in and what notes are required. There's no set format for management accounts. That means that there are fewer pro formas for you to learn, but there are still lots of different techniques that you need to be happy with. So when we're thinking of the two, you can basically think of financial accounting as recording and reporting historical data, whereas management accounting is more looking forward and helping the business to realise its objectives. Excuse the drawing, but you can think of management accounting as looking out of the windscreen and seeing as you're driving towards the tree that you're going to hit it if you carry on that course of that direction. So what you can do is you can swerve to avoid it. Financial accounting is only looking back after the event, so that's looking in the rear view mirror and seeing that you've hit the tree. So management accounting is about making changes and the ability to alter things because we've got that forward-looking information. So it's very important then for businesses, for their survival, that they are looking forward and making the best decisions. However, it's dependent upon guesses and approximations because the future is uncertain, and so we're going to be using approximations quite often in calculations. Just a note then that in your exam you should round your final answer to 2 decimal places unless you've been informed otherwise. We now need to consider the differences between data and information. So data then is raw material which needs to be processed in some way. Once it has been processed, it then becomes information, so it becomes meaningful to the person who's received it. So if we think about the telephone directory, that is information because it's an alphabetical listing of telephone numbers. So providing you know the surname, you can quickly locate the telephone number. However, if we just had a list of all of the people's telephone numbers, say in order that they had signed up to the provider, that would be data because it wouldn't actually be useful. You wouldn't be able to find the information that you were looking for because it hasn't actually been processed. We need to think about then the qualities of good information, and we can use a bank statement to help us with this. So a bank statement then is going to provide a company or an individual with information about their finances, and we can think about the different qualities of this statement that make it a good source of information. So it needs to be accurate. We need to make sure then that we have got the right figures in there. We don't want to be misled about the bank balance. So we need to know how much money we've got. We also need to ensure that it's complete. So all of the transactions that have occurred during the period should be included. It also needs to be cost beneficial. So the cost of providing information should not exceed the use value of it. Information should be targeted to the user, so we don't want to make sure then that there's information which isn't relevant. So for example, with our bank statement, details which are only meaningful to the bank would be excluded. It needs to be relevant for the decision, so if we're trying to work out how much money we've got, it only needs to include our transactions, not the entire bank. It should be authoritative, and the bank statement is considered to be trustworthy because of the qualities used. It also needs to be timely, so we would want to make sure that the information is received promptly, and this is obviously enhanced by online banking. If we had to wait a very long time, then the value of the information diminishes. And And it's easy to use because it's always in the same format, so it's always very easy to see what's gone in and what's gone out because of the column format. And we can remember the qualities of good information using the mnemonic accurate, so that can help you to brainstorm ideas about the qualities of good information. So example 3 then is a very good example of how the qualities of good information could be tested. So the worked example was giving you details about what makes information good, but here's much more of an example of how it could be tested. So in example 3, which of the following is good information? So we need to consider which one is good information. So monthly sales figures for August being received in November, well, that's not particularly good because of the time lag. So there's quite a long lag there in time. A summary provided at the front of a report to save senior managers from having to read the whole document. Well, this would be good information because it has a valid use and hopefully it's going to be a detailed summary for the purpose. A dashboard report summarising all of the key results for the last period to be used at the next management meeting. Well, again, that seems to be very good because it's only from the last period and it's summarising the key results, so hopefully they're all included. A monthly report showing that the chocolate mixing machine was adding 1% too much cocoa in the last period. Well, that might be useful, however, it's not a vast amount of additional cocoa, and so it's unlikely to be particularly useful information. So we need to be aware then some of the limitations of using information. Well, generally speaking, cost accounting information is not great for decision making because it doesn't provide the right information, and later on in the course we'll be looking at information that's much better for making decisions through relevant costing. And we should also try to incorporate uncertainty into decisions that are going to be made in the future. At the end of each chapter then you'll notice that we have a summary. So here we've been looking at what we mean by management accounting and what the management accountant actually does. We've also been thinking about the differences between management accounts and financial accounts and the differences between data and information and what makes information good. And then finally thinking about the limitations of using information from the financial accounts for decision making.